감사합니다, Erica. Hey guys, I'm Austin Federa. I'm one of the 3 co-founders of the DoubleZero project. And this is an idea that we had a number of years ago to really solve one of the fundamental differences between on-chain finance and traditional finance, which is the networking stack and the networking layer. So when you think about the public internet, it's an incredible resource that reaches, billions of people around the world for truly pennies on the packet. For $40 a month anywhere in the world, you can get pretty much unlimited data to reach anyone, anywhere in the planet, which is an incredible product of capitalism. The problem with the public internet is it was never built for high performance or high performance systems. So it has high latency, it has limited bandwidth, it has a lot of variability from moment to moment. And in blockchain, we have built around this for years, whether it's libp2p, whether it is Solana's Turbine, whether it's RaptorCast on Monad. All of these systems are designed to address a fundamental limitation of the public internet, which is it doesn't support the technologies that Wall Street, traditional finance, OpenAI, most of the large tech companies have used for decades to be able to move faster than the public internet allows it to go and produce results for users and traders that are more than the public internet is capable of. So this is really a great visualization of the problem with the public internet. And when I say problem, what I mean is the optimizations that are available if you didn't have to use the public internet. So what we see here is a chart which represents different measurements of ping time throughout the world over a 24-hour period. So this is LA to Singapore, and what you can see here is the red and the yellow are 2 different internet service providers, and we're just pinging data back and forth and measuring the time. What do you see on this chart? Right? For one, you see a high degree of variance. This is what's referred to as jitter in a networking system. It's the difference in time that it takes from one ping to another. If you're in Seoul, you should be quite familiar with this. Sometimes it takes 45 minutes to get to the airport. Sometimes it takes 2.5 hours to get to the airport. That is jitter. It's a variance based on measurement. So what we also see here is that routing on the internet is not deterministic. It changes from moment to moment. So you can see right here around 1400, the internet service provider we were using in this particular test actually switched us on to a different cable system. Maybe the previous one got too expensive because they have dynamic pricing. Maybe it was too full. But either way, you saw a meaningful jump in latency from somewhere around 250 to 300 milliseconds to a baseline of 300 spiking all the way up to 500 milliseconds at time. This is a real killer for high-performance systems. If what you're thinking about is cyclical trading and, people watch more YouTube at certain times of the day than other times of the day, maybe that's okay, but blockchains are 24/7, 365 financial markets. And because of that, you need consistent experience. This blue line down on the bottom, this is the DoubleZero network. So what you see is there's extremely low variance. It's pretty much always exactly the same amount of time to talk from LA to Singapore in this test here. And this is all real world data that we saw throughout this process. And that really is the difference in what you see on the DoubleZero network. Now this expands to cover much more areas too. But I want to hit this home that there's no high-performance network used in crypto today for this type of thing. And all of these companies, as well as thousands more, run private networks. And they run private networks for a reason. And you might be surprised. There's large public internet companies here. YouTube, Google, Meta, even eBay runs its own private fiber network, because that's how unperformant the public internet is when you get to a certain size and scale. Meta's story is particularly interesting because, of course, Facebook, they started building custom servers. That was the first thing they did in hardware. Then they started building their own racks. Then they built their own data centers. And eventually they got to a place where to service new markets, they needed to actually rebuild the fundamental fabric of the internet. Places like the Philippines and India, when they came in, they installed huge amounts of fiber, not because they wanted to make the internet better out of the goodness of their hearts, but they wanted your Instagram reels to load more quickly. They wanted you to see more ads by keeping scrolling. And if the level of ads on Instagram is worth dedicated high-performance infrastructure, we should take that seriously in blockchain as well. I think what we're doing is a little bit more important than ads on Instagram. So this is what DoubleZero is, a purpose-built high-performance fiber network. But these have existed for a while. There's many companies in the world that have purpose-built high-performance fiber networks. Jump, DRW, Cumberland, Citadel, many trading firms have this. What DoubleZero has that no one else has is this is run by multiple independent parties. So today there's over 17 different entities contributing fiber to the DoubleZero network. Just like in a blockchain, you have multiple validators run by multiple independent entities, and that's part of why the system remains trustworthy and powerful. We have the same type of dynamic on the DoubleZero network, which is the only network of its kind that we know of that's run by multiple independent parties. So this is, at its core, a deeply physical network, and this is kind of important to remember. So what we have here, it should look very familiar for anyone who took a computer science course. This is an OSI layer view of the world. And most things in blockchain today happen on layer 5, 6. They're mostly very high up. And this is by design. Part of the point of Ethereum is you can run it on a huge variety of different hardware, pretty much anywhere in the world, even with very little bandwidth. And most blockchains have continued to use this type of paradigm as they build out. And that's great if what you're trying to do is huge global access and censorship resistance. But when we're really looking at performance and when we're looking at trading, which is one of the main monetized use cases for blockchains today, we need to get much deeper and think about the physical infrastructure underpinning these. So what you see on the other side of the screen is these are switches. These are high-performance network switches. This is an off-the-shelf model by a company called Arista, and we use these for the underlying backbone of this network. And one of the things that also means is we have a problem of sharks. And so I really want to hit this home because people don't necessarily get this. This is physical cables running along the floor of the ocean under our cities. This is a deeply physical network. This isn't a software abstraction or overlay network like BitTorrent is. This is a physical infrastructure system. So this is what it looks like today. If you go to doublezero.xyz/dashboard, you can actually see this all in real time. And this, what you can show here is the different contributors that are involved in the DoubleZero network. Each color is a different network participant. And what this means is even if one participant is compromised, is hacked, goes offline, any of the type of things we have to deal with every day in blockchain, you still have redundant pathways for most of these links all around the world. This is also an out-of-date screenshot. We have even faster links up and running now, including a very low latency link that goes from Tokyo all the way to Central Europe through Russia and China, which is much faster than you can get by the terrestrial, by the ocean routes here. This is kind of the way to think about this, is we want to expand the DoubleZero network to all of the locations in the world for which blockchain validators are run. But this is more than just a blockchain network. This network can be used for all types of systems, from private blockchain systems to traditional banking network type systems. Anything that needs connectivity that's faster than the public internet is able to provide, or more consistent than the public internet can provide. And that's really the whole purpose behind what we've built with the DoubleZero network. We started with Solana because, in part, I worked there for 4.5 years, but also because it was, at the time, the only high-performance blockchain that was trying to push the limits of what the public internet was capable of. We have a lot of blockchains doing that today, which is really awesome to see. And then we have blockchains like Near, which are moving into entirely different spaces with AI inference and training work, which now require moving data at volumes that we didn't think was required for blockchains. We thought compute was the main thing blockchain needed to do. Well, now maybe we have to move a bunch of data around as well. And so one of the other projects that's using DoubleZero today is Shelby, which is a new storage network that Aptos is in the process of building. And the entire Shelby storage network runs on the DoubleZero network, in part because the system just wouldn't work over the public internet from an economic and from a technical perspective. So this is really what speed looks like in traditional finance. So this is US lit equities markets. So this is not including dark pools or any of that stuff. This is really a fairly small subset of the equities market in the United States. And the average 30-day average is 347,000 transactions per second. So when we talk about bringing NASDAQ on-chain, when we talk about markets actually moving on-chain, every blockchain today is still orders of magnitude below the number you'd actually need just for US equities markets to be on-chain. And this is a really important thing to remember. These numbers are also very smoothed. Most trading occurs at 9 a.m. and market close. So what these mean is that we actually need much more capacity, much more burstable capacity than just this. And NYSE and NASDAQ do an incredible job of this. They run matching engines that match potentially millions of transactions per second, millions of orders per second. And that's exactly the same type of scale we need to be looking at in crypto. But one of the questions that you should ask yourself is, why are testnets always so much more performant than mainnets? Every single blockchain you've ever heard of or used, including Solana, has marketing materials saying the theoretical maximum is 65,000 transactions per second, 500,000 transactions per second. And then you go and you look at mainnet and you say, oh, 10,000. Like, that's pretty great. But that's much lower. What is that delta about? It's the same problem as your Wi-Fi router, right? You go buy a new Wi-Fi router, it says 4.5 gigabits per second of speed connectivity, and then you're like, well, why are my Zoom calls having problems? It's because the real world is very different than the theoretical models. And by replacing the network infrastructure of the public internet, which has all this variability, with the DoubleZero network, we're able to get much closer to that theoretical maximum because the data dissemination is addressed at a very different low level. So this is really one of the cool things we can do on the DoubleZero network that we cannot do on the public internet. Multicast is this technology that's been standard in traditional finance for over 20 years. And multicast is very different than unicast. Everything on the public internet runs on unicast today. What that means is one subscriber, one request. So if you have, let's say you're streaming a live sporting event, every single person who wants to watch it is an additional tax on the server. You need to send out their own copy of the data just for them. And this applies to blockchain too. If you have a blockchain that has just built a block, well, suddenly it has to distribute that block out to potentially thousands of different nodes all around the world. And they can't vote on that data until they receive that data. And so you have limits on consensus that are caused by the limits on how quickly you can disseminate data. Multicast is a very different type of technology. It uses hardware acceleration within the network so that a validator only has to send the data once, and it's automatically forwarded and received by all of the other recipients in that system. You've probably run into some version of multicast in your daily life. It's how things like Chromecast and AirPlay and Sonos work, where there's one copy of the data that leaves your phone, and it goes to 10 plus speakers all over a house. This is that at a massive institutional scale. And the public internet simply doesn't support multicast. And so by using multicast, we've been able to reduce bandwidth usage for things like Solana state propagation by over 99.96%, which is crazy amounts of reduction. For one, saving bandwidth is great. That means it's more bandwidth available for other use cases. But the other thing it means is we bring a level of fairness to crypto data that we haven't had before. So in most blockchains, there's a system where you have to say, who gets the data first? And that's usually stake weighted. So if you're a market maker, it's really important that you have access to a node which is really highly staked because you get data more quickly than other people. The same way priority fees order what gets into a block more quickly, stake now orders how you get data more quickly. And this applies from everything from Solana to Hyperliquid, the whole gamut of protocols. Because of the unicast limitation, there's an order in which people receive data first. The reason NYSE and NASDAQ and pretty much all traditional financial exchanges run on multicast is it brings a level of fairness into the system. If you go into like a NYSE or NASDAQ data center, what you see is every cable going into each server is the exact same length. Why is it the same length? Because not even milliseconds matter, nanoseconds matter when it comes to high-frequency trading in traditional environments. And so by bringing multicast to crypto, we can bring that same standard institutional financial approach as well as more fair data dissemination techniques. And one of the cool things we just announced last night is DoubleZero Edge. And this is live today on Solana. So DoubleZero Edge is a real-time market platform for multicast data. And so what this means is if you are a trader, if you're a market maker, if you're someone who needs fast data about Solana, the validators themselves are publishing data directly to this multicast group. which means every moment, everywhere in the world, there are packets being sent out and replicated as quickly as possible. This is the fastest look at what's coming up inside of a block and what's just been built into a block that you can get. This is really, really fundamental technology from multicast that we've basically wrapped into a product that allows anyone anywhere in the world to permissionlessly subscribe to get data on what's happening in Solana. And the cool bit about this is Edge is a platform technology. So we can apply this to other blockchain systems, other trading systems, non-blockchain systems as well. If you are running any type of project where you have to disseminate data very quickly from one place to many other places, or from many places to many places, we should talk, because DoubleZero Edge is really suited for exactly these use cases. This is the closest thing you'll get in blockchain to a multicast feed in a traditional exchange. And we're starting to work with centralized exchanges as well to bring their centralized order data to DoubleZero Edge as well, and so you can receive a better view of what's happening everywhere in the world from a trading and market making perspective over DoubleZero Edge. So we just announced this last night. If you go to doublezero.xyz, you can see all the information there on it, as well as how to permissionlessly join. And I want to hit on this permissionless part, because every single other way to get data about equities, commodities, blockchain data, anyone who's providing these fast data feeds, they've always had a web portal. You sign up, you put in a credit card or something like that, you pass KYC, you go through a whole account process, and then you receive the data. With DoubleZero Edge, because it's all powered by on-chain smart contracts, all you have to do is interact with the contract, pay in USDC, and you'll instantly start receiving shreds. You'll start receiving this quick look at what's coming up in blocks. And if you don't pay, the connection closes. This is the beauty of blockchains and stablecoin payments, is we're able to do this at a rate and with an efficiency where even the smallest validators can participate. So we've got some incredible launch partners for this. Triton, Jito, Harmonic, and a bunch of other folks. We now have over 45% of Solana validators publishing data into DoubleZero Edge. And so it's a pretty complete view of what's going on in the trading environments. And one of the really nice things about this is the system actually, oh yeah, here we go, here's some stats. The nice part about this is these are out of date. So we actually have over 425 validators participating, which is about 60% of the physical servers running Solana. We just passed 210 million SOL connected into this program as well. But the cool piece about this is it actually pays validators as well. So one of the nice things about this system is we have a rev share component with validators that are publishing in. So just like MEV and tips and priority fees created a new monetization stream for validators, this data is valuable. Trading firms spend a lot of money to get this data. So why not have validators take a share of that as well? And we think that by building these platforms in an open, equal access way with permissionless contribution and permissionless subscriptions, we can actually create new monetization avenues for validators that don't involve things like sandwiching or harmful actions that have price impacts for users, but instead the high-frequency trading work, which actually provides improved prices. And I am so excited to say that on Solana today, you can get better pricing than any centralized exchange for things like SOL USDC pairs. The slippage is lower, the pricing is better. It's a real achievement of DeFi. And so we're really excited to be a bit of a small part of that with DoubleZero supporting. And we kind of look at the adoption here. And so we started this just a few months ago, and we've already seen, again, 45% of Solana is now connected in and publishing data to DoubleZero Edge. So this is what I was talking about before in terms of the Edge revenue model. Some interesting things to note here. The network contributor side, that's the physical fiber infrastructure providers that make this network possible. The validator share goes to those operating validators, and it's proportional to their stake weight. So if you have 10% of stake, you would receive 10% of that 32.5%. But there's also a protocol clients team component in here. Across all of blockchain, the folks who actually build the protocol clients are completely unmonetized and unsupported. They're entirely grant-based. They have to go and ask for grants, and it's incredible that as an ecosystem, we actually fund this type of development. But we think it's actually really important that the protocol teams compete with one another. We want them to always be building the fastest software clients that delivers the best experience for validators and the fastest data out to traders. And so protocol client teams also receive a payout in rewards here, and that's an incentive for them to keep optimizing and figure out how can we publish data even more quickly into DoubleZero Edge, because it's in our economic advantage to do so. So this is what we think of as new finance in crypto. This is the idea that we can take the best learnings of traditional finance, something this industry has usually shunned, but there's a lot of stuff they got right. There's a lot they got wrong, but there's also a ton they got right, and one thing they got right was the core infrastructure layer. And so we view DoubleZero not as a replacement for the public internet, not as a replacement for these other systems, but as a way to supplement them. That when the DoubleZero network is available for you, you can run significantly faster than you can over the public internet, but also, networks go down. I'm not going to say there will never be a problem with the DoubleZero network, and so it's very important that teams think about this as like a supercharger, a turbocharger on their existing systems. And so it can run completely in compatibility with other systems as well, and that's kind of one of the main powers of the DoubleZero network. So you can go to fastshreds.com. You can see this whole thing live and in action. We also have a very cool multicast dashboard that shows just in real time how much faster this data propagation layer is via the DoubleZero network than via Turbine, Jito Shred Stream, or any other type of shred distribution system out there. Okay, thank you.
Thank you, Austin. We do have a little bit of time, so I got a quick question for you.
Great.
First off, congratulations on the launch of DoubleZero Edge. Super exciting stuff. You said everyday consumers can get access to this as well, because the first thing I thought of was like, oh my God, you're just making all the high frequency traders a lot more productive. So are you seeing any quick? I mean, it just launched yesterday, right?
Yeah.
Okay. So I was going to say, have you seen any adoption from like non-sophisticated, enterprises?
Yeah. So I think the question of like non-sophisticated is always hard to say. Yeah. So DoubleZero is built for folks who know what they're doing. If you are opening Phantom and you're trading out of that, this really isn't a product for you. But we have like 1- and 2-person trading shops that are running comparatively pretty small amounts of money that are subscribing to DoubleZero Edge, and they're seeing real advantages in what they do. Cool. One of the weird things about high-frequency trading is the small shops often outperform the large shops because it's a focus problem, right? Most products that are made by a large conglomerate are worse than the product that a specific company makes. Yeah. But what they're selling is that whole capacity. So yeah, we're definitely seeing folks who are on the smaller side using it as well.
And I guess what's next on the different sort of types of assets? I can see this being incredibly valuable for X stocks and other stuff as they launch.
Yeah, one of the things that's gotten really interesting is like oracles in crypto are built to solve a very DeFi specific problem, which is like I want to know the aggregate average price of Bitcoin to know if the price I'm quoting is particularly good or not. Oracles are not particularly good at saying what is the current price of a commodity. They're not designed for sort of, I want to know what Coinbase's price of Bitcoin is, what OKX's price of Bitcoin is. And so we're seeing a lot of interest in other types of data feeds, both equities and commodities, as well as the idea, the ability to say, if I'm an arbitrage trader and I want to buy Bitcoin, what is the best platform to buy that on, whether it's near intense, whether it's on-chain on Solana, whether it's Coinbase or Binance or OKX, how do I get that view of the world? And today, right now, the only way to do that is to run a bunch of servers co-located at all of these places or rely on the public internet, which is pretty latency intensive. Yeah. So we see a lot of different types of assets that can be brought on-chain with this. But we're not actually bringing the asset on-chain. It's the data feed to support perps, futures, that type of thing.
That's super cool. And I love the focus on new monetization mechanisms for validators, because I think a lot of validators, especially in other ecosystems, get subsidized. Yes. Do you have any idea on how much money they might be able to make?
It's hard to say because we just launched. But what I'll say is on Solana, there's about $40 million a year spent on shred products of all sorts today, based on our best estimates. In TradFi, this is a $40 billion industry. Yep. So really, the way to think about this is if no one wants to trade on the chain, no one's going to pay for this data. No. But all the work that everyone's doing to make these places great venues to trade makes that data coming off of them even more valuable.
Got it. And excuse my ignorance, but can you remind me what shreds are?
Oh yeah, so shreds are, you can think of them in Ethereum world as like pre-confirmations.
Okay.
They're basically the smallest little bits that make up a block. So on Solana, yeah, I should have explained this is very Solana-specific terminology, but a block is basically streamed out in real time. So we don't wait 400 milliseconds, then transmit a chunk of data. There's actually data coming out constantly. And that means that you can actually be observing the shreds coming out and see a pretty good idea of what is actually going to be in this block. And so maybe that gives you time to get a cancel in, that gives you time to top up a liquidation, all that type of thing.
Got it. And also, just clarify this if I'm misinterpreting, but this is an Oracle network, correct?
It's not really an Oracle network. Okay. Yeah, this is a really good point of clarification. So what an Oracle does is it brings data together in a few different locations and it calculates a price. Yep. This is the raw data feeds. So, you know, if you are someone who like says, hey, I want to consume this data and run my own trading algorithms on it, we're giving you the same raw data that you would eventually get over the gossip network or through the normal state distribution channels for a blockchain. We just get it to you much faster.
So do you anticipate Oracle's building on top of this?
Yeah, absolutely. Okay. You know, we've been talking with a few oracles about bringing their data feeds. The way I would say this is we have no expertise in telling you what is good or bad. We're a data distribution layer and data platform. So oracles are really good at saying, hey, this price is good, this price is wrong. But all of them today are distributing that data over the public internet. Yep. And so by the time you get like a feed for the price of Tesla stock in Tokyo to trade the perp on Hyperliquid, that data is quite stale. Yep. And that doesn't really matter for crypto native assets as much, but the minute we're dealing with assets that are coming from other parts of the market, and when institutional traders come in, they're just like wiping the floor with retail at the moment because the retail doesn't have access to that data.
Got it. Well, this is super exciting stuff. Thank you so much for your time. And give it up one more time for Austin.